Hey guys, Mike here. So another loaded video for you, and I mean loaded with plenty of data here. And something happened today which is very curious, where there was certain data came out and the 10-year reacted differently than it's been reacting to this data. And so it's very important, and I'm going to show you why, because you might be wondering, I don't understand why we're not in a recession, why the bond market isn't freaking out, going crazy, and why financial conditions are still loosening. They're saying they're loose, even though the Fed has the Fed funds rate, basically over the last year and a half, held it higher than it's been in quite a long time. And so we're going to talk about that and get into that, plus some other charts. You might have noticed Nvidia actually woke up today while some other semiconductors went to sleep. And some others actually woke up and kind of pulled the market up and everything. But there is one ETF, and it ain't the QQQ, that I think will hit all-time highs before the QQQ does, and that is the QQEW, and I'll show you why that's going to happen. And when you look at this right here, this is the data we got for the last couple of days here, okay? So let me just kind of go through this real quick. So U.S. job openings by industry, you see it was actually less than what they expected. It did come down, but again, look at what was norm, right? And here's 2017 and 2019, so we're getting kind of in that range. Again, this usually comes up after a recession for a number of years. You can see from the .com, you can see from the 08 crash. And so 2017, 18, 19, about where normal, we're about there. U.S. job quits rate, right there, around 2. What was it before? You can see it's anywhere from 2, 2.5, right? That's actually normal. So that's another normal mark to look at. Look at the layoff rate remains remarkably low. It's down here. Matter of fact, you notice about every 10 years, I guess, it goes down. Why do you think that is? Just out of curiosity. That was early 2000s, mid 2000s. Now here we are. And so that's low. And then if you look over here, this is the data we got today. And it actually came in much higher than expected. It was the ADP payrolls for January. It came in at 183K versus 150K at 8:15 in the morning. But guess what? The 10-year did not spike. Normally it spikes off this because like, oh, the Fed can't, cut rates down, all this crazy stuff, and it's hot data. It did not. It dropped with it, which was very interesting. I did, another one is that manufacturing, I told you, is always crap. Minus 13,000 jobs on that one. But again, you look over here, it's some more though. ISM services data we got here this morning. It came out after the bell opened. It came in less than expected. What did the 10-year continue to do? It continued to drop. Right, and this is not a contraction or anything. And remember, we're 70% services-based economy, but you can see new orders is what I always like to look at, and that was 51 versus 54. I don't like to look at 1 month though. I like to look at multiple months. You can see it's kind of been turning over right there. So this is something to definitely keep an eye on. Then you come over here to January update, and this is the big one. What are the banks telling us? Okay, so this is what the Fed senior loan officers are telling us. The net percentage of firms tightening credit standards was still positive, but readings are tame relative to spikes and highs. If it's going up, we're going into a recession. Right now, it's going down and turning sideways. Okay, this is very important to understand. I've been talking to members about this for like 2 years now, probably 2.5. Net percentage of banks willing to make consumer install loans rose upwards, right? When we're going into recession, this is going down. Okay, they're not willing to loan money out. They start tightening up. This is what drives us into the recession. Okay, because the liquidity dries up for people to get money for their companies and everything else. Net percentage of banks reporting strong demand for C&I loans. That's going up. It's actually out of contraction now. That's actually a good thing. If you look at when the recessions are going and leading up to it, it's going down like it was before. Okay, so that's very important to understand. And one big thing about it is the 10-year yield. Why? The 10-year yield is so important because it is what's going to set those loan standards, right? So when the 10 years way up here, what have you heard about 30-year mortgages? Oh, they're going up. The mortgage rates are going up, making it harder. As it starts to drop, I'll guarantee you're going to start seeing them go, oh, look, the 30-year mortgages are going down, and all the others start to go down. It makes it easier to get money for less, right? For a lower percentage. And so that's why everybody's watching like a hawk to see if it's going to continue to drop. And if it does, which we're going to go into the chart and show you, then that's actually a good thing for the economy, for the market, everything else. There's nothing bad about that. Now, when you look at the SPY here, you can see right here, what do we talk about? We gapped down this morning off Google earnings and all that fun stuff, but we broke above the level of 600. Once we did that, you see kind of rocket up in pre-market right there. There's that dark pool level, came back down, retested it, and then there's that 4-hour fair value gap I told you about. So when we hit it, we should slow down. Well, we hit it, I think it was in pre-market right at open, and then we just grinded up right there around lunchtime on us. So for 4 hours, there it was, just to grind up. And so again, we end up green for the day, okay, but we end up in that 4-hour fair value gap. That's normal. When you pull out on SPY, what are you seeing though? You still see lower highs, lower lows. So it needs to break through this 4-hour fair value gap to set a new high, or just turn over and set a higher low like you're seeing on the Qs here. What are the Qs doing? The Qs never set a new all-time high, but one thing it's been doing very quietly, setting higher lows. So lower highs, higher lows means it's wedging, right? Waiting for that move out. It mitigated that 4-hour fair value gap of its own right there, and so that's what it's doing, right? And so if it breaks above that descending trend line, which is anywhere from 529 to 530.50, whenever it actually hits it and breaks above it, you can clearly see the levels it has to break. I mean, just look at the wicks, you can see them. And so it's going to break 530, then it needs to break 532, okay? And so, or of course, if it breaks down, then, well, we're heading down to that gap down there between like 505, 510, somewhere there most likely. But most likely everything's kind of pointing up right now. Well, you know, that's what we're looking at least. And like I said, I think the QQEW actually hits an all-time high. If any one of them is going to hit an all-time high, it's going to be QQEW first because it's only 1% away. And you've probably seen this in your portfolio. You know, what is it doing? Unlike the QQQ, it's setting higher highs, higher lows, right? So it's very close. And you've probably seen this in portfolio where you got stocks that aren't the Mag 7 that have been doing better, right? This trend line has held so far. And it's real obvious when you look at it here. You can see the mags, right? The ETF that tracks the Mag 7. It's just setting lower highs, but it's wedging. See, and so because you know you'll get Apple going one day, Microsoft is not going, Tesla's down, Nvidia and Tesla can't go together. You'll see that again today, and so they're all over the place. And then like Meta doesn't have a big enough weighting to really pull them up, and so the ones with the heaviest weighting are basically being weighed down at this point in time. So that's why QQEW, and it's good. That means more breadth, more stocks, right? And so we'll see which one makes it there first. I'm going with QQEW though. Again, IWM, like we talked about, ended up gapping down, moving up this morning right here, broke that trend line. So now we're between 227, 230 once again. Okay, and when you look at this though, you can see 230.23, right? It's been hit many times. If that gets above that, it's going to 235-ish right in there. If we break 226.97, we're going down to 222. But when we look at this one closer, you can see we have hit this level 1, 2, 3, 4. So this will be the 5th time if we come up and hit it. And it's like kicking down a door. Eventually, you know, it's getting weaker and weaker, that level. It's going to break up. And if it breaks, then 235, here we come. Especially the 10-year right here, as you can see, is still going down. And that is not a bad thing right now. And you can see it broke that support line right there. Boom, it broke that trend line right there. And so you can see exactly where it's heading down to. Somewhere around like 4.383, I think is what it is, probably the target. Unless something shifts here. But you can see where that, and I showed you guys this, I don't know how long ago it was, but this head and shoulders pattern, right? And so far it's playing out. You can see where the target's at. It's around like 4.28, I believe it is. I don't know if we get down to there, but you can see there's a support slash descending trend line that matches right there together, right below us, probably like maybe 0.5% away. And so if that continues, IWM, high beta stuff is going to continue to go. And what else is going to go? Housing, right? Because the 30-year mortgage, whenever it drops, you see these housing stocks. You can see when it starts selling down, stuff like XHB, Redfin, all the others, like they like it when the yield drops. Okay, there is an inverse relationship. So let's see if that continues. Now, Nvidia, big day for Nvidia, kind of woke up out of the slumber. We talked about where it had to get past, and it woke up on some Google news, right? Because they were spending a lot on CapEx, so ARM ended up moving up, Nvidia moved up, I think it was Abgo moved up as well. And so it got through those anchor VWAPs. We did finally power through and mitigate the 4-hour fair value gap. And more importantly, it rode that 200. And hopefully that's where it stays above. I mean, you got to stay above the 200. It's just that simple, okay? So it's above the 200. And we'll get into Tesla in a minute because, once again, those two can't coexist for some odd reason. And so we closed at 124, 125 right there. And we're going to draw a trend line here because that's going to be the next. See if we test out tomorrow, end up hitting that around 125.10. And if we break above that, obviously going to 126, then 128, then 131 if this starts to get rolling. And obviously, if we break down through this, which you hope we don't, we're going to fill that gap right there down to around 118. I will go ahead and mark out that big gap from the deep seep thing, or what's left of it. That starts at 129. Then you got your moving average in the middle, and so that ends around plus 140. But let's not get ahead of ourselves yet on this one. When you go over here to Tesla, obviously, those two cannot coexist as usual. And of course, Tesla just sitting there moving down today. It actually had probably the worst of the Mag 7, if I'm not mistaken. You can see, though, it's trying its best to hold the 378.16 level. If that breaks, maybe finally we get to come down here to that 360-ish area right there. So that would be a nice place for it to bounce right there, because we know that's where support is. And would give us a nice discount down to 0.79 fib as well. So I know there'll be a lot of buyers sitting there waiting to go. If that is the case, remember, this move up has not been fundamental. They already reported earnings. Earnings were not good. And so, you know, this is all based on robo-taxis and robots and all that fun stuff. You can see the volume gap right there. If it does, that's why it's trying to hold on for dear life right there. And so really there's two paths on this. I mean, you could definitely see a bounce from here and start heading up towards that trend line right there, which wouldn't surprise me a bit because it's Tesla. And then we'll see if we get rejected from there to come down to 360. And obviously if we break above that trend line right there, then, you know, we're going up to 410, 415 again. So that's really the way to look at Tesla. We just need, for the market, I think the market more than anything just needs Tesla and Nvidia to shake hands, you know, talk to the options market so they can start moving up together. It's just amazing how long this relationship has been going on, this inverse relationship between those two. So if you're trying to ride Nvidia up, good luck trying to ride Tesla up with them. They never get more than 1 or 2 days together, that's for sure. Now, Apple, this one right here, got down today on news that China was going to launch an investigation. That's nothing but retaliation, obviously, for the tariffs. They would have launched an investigation if they felt like they were actually doing something wrong before this, but they waited till the tariffs got on, so this is how they act. And so again, what did it do? It started moving back up, filled this gap right here to the penny, and that's where it left it. When you look at this, to me, though, I'm going to go ahead and give it the benefit of the doubt and say this is an upward channel right here. You'd also call, maybe say this is a bear flag or something. Maybe that's what it is. But let's see if we move to the top of the channel first before coming back down. I'm going to give it the benefit of the doubt. If it does break 230, 235, then obviously it's heading back down. But we'll see if it gets to the top of the channel. Now, Google came down, hit this area right here, and you can see it's bounced many, many times in that area. That's where it got its bounce. I will say, obviously, is this overreaction? Probably, but I mean, we're used to that in the market, and sometimes you see these big recoveries. But if it does decide to come down from here, you can see there's a lot of stuff going on down here. Nice discount, nice ascending trend line, got a gap right there between 175, 180. And so that would be a very, very nice dollar cost average area for sure. And you can see a very powerful bounce. It's only 5% down from where it's at currently. But again, you know, this is one of the Mag 7. It was a big move down for it, almost 10% in after hours and stuff. And so wouldn't surprise me just to see this thing start heading up. And a lot of people were buying calls, betting on that. So no big surprise there. But again, if it gets down to that shaded area, you're talking about from the 0.5 fib, past the golden pocket, ascending trend line, gap fill, all that good stuff. And we'll see if we get that lucky or not. Now, Affirm, watch this one. It does report this week. It seems like it's trying to break out. Obviously, so far on the earnings, PayPal got dumped, SoFi got dumped. And so I don't know if Block even reported honestly yet, but we'll see if this is going to be a third one or not. If not, this is a big mover, right? You've seen on earnings, the last 2 earnings, this thing, it went parabolic on you. Before that, it just moved down almost every single time. But now it's on this upward trend. So, you know, again, they're going to have to hang the moon here, right? Pretty much to get this thing moving, but it's a high flyer, okay? And so I just want to put on your radar, it is trying to break out. It is trying to set, what, higher highs, higher lows right now. So setting out structure before it reports, I believe this week, if I'm not mistaken. So keep this one on your radar. Again, this level right here, I'll mark this one out because it seems to be a pretty important level. So 52, lose 52, heading down to probably like 44, between 40, 44. And then, of course, break up above 63, and we're probably heading to 68 and 76 is what I'll be watching out for. Now, when it comes to earnings, tomorrow, Eli Lilly, Roblox, ConocoPhillips, Peloton, Hershey's, and then after is the big one, Amazon right there. Elf, Cloudflare, there's Affirm. Fortnite, and by the way, yes, I appreciate this. I know Fortnite is a game. I swear to you, I know Fortnite what it is. I'm just messing with you guys, trying to see who's actually watching the videos to the end, because most people do not. So anyway, I appreciate that though. Now, and plus my son loves the game, so he laughed when I did that in the video. So I think when it comes to data, really the only big one's going to be unemployment claims at 8:30. That's about all you got to worry about with that. So again, that'll probably create some volatility. We'll see. And, let's see if it's going to be green tomorrow. It looks like it's pointing in that direction right now. But anyway, please hit the like and subscribe button if you got anything out of this. Really appreciate you guys. Think about signing up for membership. Less than a McDonald's combo, and that's everything you get with it. And I'll see you guys tomorrow.